My friends, something big is happening this November. For every senior, every pensioner, and every retiree across Australia, this could be one of the most important Centrelink updates of the entire year. Right now, the government has quietly confirmed a major series of age pension adjustments and new payments that will begin rolling out in just a few weeks. And if you receive even $1 from Centrelink, whether it's the age pension, disability support pension, or carer payment, you'll want to listen carefully, because these changes directly affect how much you'll receive and when those payments will land in your account. Before we dive deep, let me say this. If you rely on your pension to pay the bills, cover rent, or simply enjoy a decent meal without stress, this update is for you. And please, before we continue, make sure you subscribe to this channel and click the notification bell, because here we break down every single Centrelink change in simple language, so you'll never miss an important update that could put more money in your pocket. Now, let's talk about what's really happening this November. For months, there have been rumors of new adjustments. Some people called it a cost of living top-up, others thought it might be a one-off bonus. But the truth is more detailed and more impactful than anyone expected. From November, a new round of indexation and payment adjustments will start showing up for eligible age pensioners. And it's not just about a few extra dollars, it's part of a larger recalibration of benefits that's meant to respond to rising prices, rent pressure, and the real-life struggles that older Australians face every single day. When we say big changes, we mean everything from the base rate of the pension, to supplements, to thresholds that decide whether you qualify for the full or part pension. And yes, Centrelink has officially confirmed that these new rates will begin appearing in the first payment cycles of November. Let's be honest, 2025 has been a challenging year for seniors. Grocery prices are still high, energy bills haven't eased much, and rents in some cities are at record levels. Many older Australians tell us the same thing. Their age pension payments just don't stretch far enough anymore. That's why this latest update from Centrelink isn't just another bureaucratic adjustment. It's a real lifeline for thousands of households. For those on the full age pension, this November adjustment means your regular payment will be higher than it's been all year. And for those on the part pension, the changes to income and asset thresholds mean you could now qualify for a larger payment, or even regain eligibility if you lost it earlier this year. To put it simply, more Australians will now receive the full pension. Those already on the pension will see higher fortnightly deposits, and extra support measures are coming for those renting or living alone. Every year, Centrelink and the Department of Social Services review age pension rates twice, in March and September, based on movements in inflation and wages. But occasionally, extra adjustments happen outside those months when the government needs to respond quickly to economic pressure. And that's exactly what's happening now. The November round isn't part of the normal indexation cycle. It's a special adjustment introduced to keep up with the fast-rising cost of living, especially for seniors who've seen their budgets tighten over the last 6 months. You might remember the September adjustment that increased the maximum pension by a small amount, but this November's change builds on that, targeting key groups like single pensioners, couples, and renters with additional support. In other words, it's a boost on top of a boost. And here's something even more important. This adjustment is automated. That means you don't need to reapply, fill out forms, or make appointments. If you're already receiving the age pension, your payment will automatically increase in your next scheduled deposit after the November update takes effect. Here's what we can confirm from the latest Centrelink information. From November, the base rate of the age pension is being recalculated to reflect both inflation and the updated pensioner and beneficiary living cost index. This means higher fortnightly payments for single-age pensioners, couples, and part pensioners who fall under the new income and asset thresholds. To give you an idea of scale, for a single pensioner, the total maximum fortnightly payment, including the pension supplement and energy supplement, is expected to rise by around $30 to $40. For couples combined, the total increase will be approximately $45 to $55 per fortnight, depending on their individual situation. It might not sound like a fortune at first, but remember, these payments add up over months, and every increase helps offset the growing cost of essentials like fuel, utilities, and food. It's not just about the money in your account. These new rates will also flow into related benefits like the Commonwealth Seniors Health Card thresholds, the Pensioner Concession Card eligibility limits, and the Rent Assistance Supplement, which will also see a small upward adjustment. That means extra relief for those struggling most with rent, especially single retirees in major cities. Now, let's talk timing, because that's what everyone wants to know. When will the money actually arrive? According to Centrelink's internal payment schedule, the new rates will start applying from the first full pay period in November 2025. That means if your regular payment date falls in the first or second week of November, you'll likely see the increase in that very deposit. For most seniors, this will show up automatically in their MyGov account under the Payment and Claims section, where the updated rate is displayed. If you use direct deposit, check your balance on your regular payment day. It might be higher than usual. And here's the key part. This increase is permanent, not a one-off bonus. It becomes the new baseline going forward. You might wonder, why now? Why November? The answer lies in a combination of factors: inflation, public pressure, and the ongoing cost of living crisis. The government has faced intense scrutiny over how older Australians are coping. Surveys show that more than 60% of pensioners have cut back on food, heating, or medical expenses this year just to make ends meet. That's unacceptable, and policymakers know it. So, by implementing this November adjustment, the goal is to restore some fairness, to help seniors maintain dignity, independence, and security during tough economic times. Treasury reports show that this change will cost the government several $billion, but officials have said it's a necessary investment in the well-being of Australia's retirees. And remember, when seniors have a little extra money, that money goes straight back into the local economy: groceries, medications, community services, and family support. It's not wasted. It circulates, strengthens communities, and keeps regional economies alive. If you're watching this, the best thing you can do is check your Centrelink details early. Make sure your income and assets are up to date in your MyGov account, because even small errors can affect your payment rate. If you recently sold a car, received a small inheritance, or changed bank accounts, update those details now. That way, when the new November rate kicks in, you'll receive the correct amount without delay. Also, if you're not currently receiving the age pension, but you think you might now qualify because of the new thresholds, this is your moment. Use Centrelink's Age Pension Eligibility Estimator or talk to a Financial Information Service officer. Many Australians are surprised to find they now qualify for at least a part pension under the new limits. Every few months, Centrelink reviews what's called the income and asset tests. These tests decide whether you receive the full age pension or a part pension, and how much is reduced if you earn or own more than certain amounts. Now, from November, those thresholds are being lifted again. If you're a single pensioner, the amount of income you can earn before your pension starts to reduce is going up. That's good news, because it means you can earn a little more from part-time work, superannuation, or investments without losing part of your Centrelink payment. The same goes for couples, whether both partners receive the pension or just one does. The asset thresholds, that is, the total value of what you own, including savings, investments, and property not counting your main home, are also being raised. That means seniors who were previously just above the limit may now fall back into eligibility for the part pension. Let's say you had modest savings or a small investment that disqualified you earlier this year. Under the November changes, you might once again be eligible for regular payments. This is a critical adjustment, especially for middle-income retirees who found themselves stuck between not qualifying for the full pension but still struggling to meet daily expenses. One of the most requested updates among pensioners has finally arrived, a further boost to rent assistance. If you rent your home and receive the age pension, you already know how tough it's been. Across the country, rent prices have climbed faster than pension payments for years. But this November, Centrelink is increasing the rent assistance supplement once again, and this time, it's meaningful. The average single renter on the age pension will receive an additional increase of roughly $10 to $15 per fortnight, on top of the September raise. Couples who rent together will see a combined increase of around $15 to $20 per fortnight. That might sound modest, but every extra dollar here goes directly into your pocket, and it's specifically designed to help you cover rent. Officials have acknowledged that many older Australians, particularly women over 60, are now among the fastest growing groups experiencing rental stress or homelessness. This new rent assistance adjustment is meant to give those at risk a bit more breathing room. If you're already receiving rent assistance, the new amount will appear automatically in your Centrelink statement. You don't need to apply or requalify. However, if you've recently started renting, or if your rent has increased significantly, you should update your rent details through MyGov so Centrelink can calculate your correct entitlement. Next, let's talk about the Commonwealth Seniors Health Card, or CSHC. This card gives self-funded retirees and part pensioners access to cheaper medicines and some medical services, but the key is income eligibility. In November, the income threshold for the health card will also be lifted slightly following the pension indexation. This is an important change because it means more retirees who are not on the pension, especially those living off modest superannuation, will now qualify for this valuable card. The government has quietly expanded eligibility for this benefit over the past year, and this November adjustment continues that effort. If you previously missed out by just a few $100s of income, check again. You may now be eligible. You can apply directly through MyGov, and once approved, you'll start receiving discounts on prescription medicines under the PBS, as well as potential concessions on electricity, gas, rates, and transport in some states. For many, this card is almost as valuable as the pension itself. Another key part of this update is the energy supplement, which will remain in place and continue to be paid automatically along with your regular pension. It's a small but steady support aimed at helping with electricity, gas, and heating costs. But there's also growing talk inside government about an additional cost of living bonus coming before Christmas. While not officially confirmed yet, several reports suggest that one-off relief payments for low-income Australians and pensioners are being considered as part of the upcoming mini-budget. If approved, this could mean an extra lump sum payment in December, possibly ranging from $250 to $500, targeted toward pensioners, carers, and veterans. It would function similarly to the pandemic-era stimulus payments, providing immediate financial relief at the end of the year. If something doesn't look right, don't panic. Sometimes it takes an extra day or two for updates to process. But if after a few days your amount still hasn't changed, you can contact Centrelink's Older Australians line to confirm your details. It's also a good idea to double-check your bank details are correct. Mistyped account numbers or old accounts can delay payments, and you don't want that, especially when new rates begin. Now, one question many are asking is, does this November change affect next year's pension rates? The answer is yes, indirectly. These new figures will serve as the base rate for the next official March 2026 indexation. That means future increases will be calculated from this new, higher baseline. In other words, your future pension raises will be even higher because of this November update. It's a smart move, a kind of early adjustment that helps keep pensions aligned with inflation over time. The goal is to make sure the value of your pension doesn't fall behind as the cost of living rises, something many seniors have been demanding for years. So far, we've covered the base rate increases, new thresholds, rent assistance boosts, and updates to health and concession cards. But there's still more to talk about, including how these changes interact with superannuation income, part-time work, and other Centrelink benefits like the carer payment and disability support pension. For now, the message is clear: November is a turning point. These changes are designed to help older Australians breathe a little easier, to make life just a bit less stressful, and to ensure that after decades of hard work, no one is left behind. So check your details, stay informed, and remember, this is your right, your pension, and your future. And as always, if this update helped you understand what's coming, make sure to subscribe, share this video with friends or family who receive Centrelink, and stay tuned for the next round of confirmed updates. Because here, we make sure you're always the first to know what's changing, when it's changing, and how it affects your wallet. Thank you for watching, take care of yourself, and we'll see you in the next update.